Critical update alert. This is breaking and it affects every XRP holder. If you hold between 100 and 100,000 XRP, what I'm about to show you could redefine what those tokens actually mean. Because we're not talking about hype cycles anymore. We're talking about mathematical inevitability. In the next 60 seconds, you're going to want to hang tight because what I'm about to reveal may be the final calm before the ignition phase. Once this switch flips, the numbers you see on your screen will never look the same again. At the time of recording, XRP has been holding steady around $2.98 for months. That stability isn't weakness, it's compression. Markets don't stay silent this long by accident. What you're seeing is the spring coiling before release, the same stillness that came before every monetary transformation in history. Before gold detached from the dollar, before SWIFT went live, before PayPal standardized instant settlement. This is not financial advice. Always do your own research and consult a qualified professional before making any financial decisions. Here's what most people miss. The longer XRP stays flat, the more liquidity pressure builds underneath it. Behind the scenes, banks and payment giants are retooling their infrastructure around Ripple's architecture. Visa's latest blockchain announcement mirrors Ripple's 2018 ODL patent almost word for word. MasterCard's pilot documents use the exact same terminology, on-demand liquidity. And a recent Bank for International Settlements trial ranked XRP as the most efficient bridge asset in live testing. Not second place, not close, but dominant across speed, cost, and volatility. That's not speculation, that's activation. So when people ask why XRP is stuck at $2.98, the answer is simple, because the system is holding it there while it finishes wiring the next phase of global finance. Institutional wallets, identified only by hash patterns, are accumulating millions of XRP every 30 days, like clockwork. No rotations, no sells, no liquidations. That's not trading behavior. That's strategic positioning. Every few decades, a wealth transfer so massive unfolds that most people don't notice until it's over. We're standing in one right now, the shift from pre-funded accounts to real-time liquidity, from idle capital to instant movement. And the bridge that makes it possible, XRP, is still priced under $3. That's not just undervalued, that's historically suppressed. Because once corridors flip from pilot to production, a $3 token can't settle trillions in flow. It has to reprice to fit its function. That's what a $75 XRP actually represents. Not hype, not luck, but mathematical necessity when utility meets velocity. Glad you made it this far. Stick with me for just another 30 seconds and you will see whether you hold 100 XRP or 100,000. You'll understand what you really own. Not a lottery ticket, but a seat on the infrastructure that will move the world's value. The question is no longer if this happens, it's when you realize it's already started. What's happening right now isn't random price action, it's a liquidity chain event unfolding in slow motion. Every major market reset starts this way. Quiet, data-heavy, and invisible to retail until it's too late. When liquidity migrates from pre-funded accounts to on-demand corridors, price doesn't rise, it recalibrates. Here's how it works. Every dollar that enters a system built on pre-funded Nostro Vostro accounts is frozen capital. Banks keep trillions of dollars sitting idle around the world just to make sure payments clear on time. Ripple's ODL model erases that need entirely. Instead of holding value in dozens of currencies, banks can now hold XRP as the universal bridge and convert in real time. The moment that becomes operational, a portion of those trapped trillions has to re-enter circulation through XRP. That's the trigger no one's ready for. We're not talking about new investors buying tokens. We're talking about global capital being freed and repurposed through a single asset. That's why this $2.98 price point is an illusion. It's a placeholder for a system still being tested under load. The banks already understand this, which is why the same wallet clusters keep showing up in corridor simulations. Singapore, Dubai, London, New York, moving millions in test transactions through the XRPL every week. Now think about what happens when that testing goes live. Liquidity is like electricity. Once you turn the switch on, it must flow somewhere. When those corridors open, XRP instantly becomes the conductive metal of the financial grid. Each transfer burns a tiny fraction of XRP as a transaction fee, shrinking supply forever. Multiply that by billions of payments per day, and you have a built-in deflationary mechanism that pressurizes price by design. That's why institutions are holding, not flipping. They're not trying to scalp XRP for 5%. They're positioning for utility compression, when price has to rise to keep liquidity flowing. Let's run the math. Ripple's corridors already move several billion in daily volume across Latin America and Asia. If those corridors expand to even 1% of the global cross-border flow, $600 trillion annually, That's $6 trillion of value cycling through a circulating supply of roughly 52 billion tokens. But only a tiny fraction of that float is liquid on exchanges. When utility demand rises, price must rise to maintain liquidity efficiency. That's not a bullish prediction. It's an engineering requirement. That's the heart of the liquidity chain reaction. It begins with ETFs and custody products siphoning liquidity off the open market. Analysts like Jake Claver and Stephen McClurk estimate between $3 and $5 billion could enter spot XRP funds in the first month alone. That capital doesn't just buy tokens, it locks them in cold custody for regulatory compliance. They vanish from circulation. Combine that with banks holding operational reserves for ODL, and you get a liquidity vacuum, a scarcity loop that amplifies every new dollar entering the system. The result? A multiplier effect. If $3 billion hits an exchange pool where only 2 billion XRP are available, each dollar competes for supply that doesn't exist. Prices don't rise linearly, they spike exponentially. That's the same phenomenon that pushed Bitcoin from $900 to $20,000 when futures launched in 2017. But XRP's float is even tighter and its utility far deeper. That's why Claver's multiplier math points to a 50x to 100x revaluation once institutional money collides with real-world utility. And this is before you even factor in Flare network integration, where XRP holders can lend, stake, and wrap FXRP for yield. That turns dormant capital into productive liquidity and multiplies circulating velocity, utility on top of utility. Every financial system in history has a point where velocity outpaces price, then price has to catch up. That's exactly where XRP is sitting now. And here's where it gets even more interesting. When liquidity begins moving through corridors in real time, the same XRP can settle multiple transactions per minute. That means each token represents a throughput value far beyond its spot price. So when analysts talk about XRP to $75, it's not about a market cap jump. It's about functionality compression, price rising to reflect how much global value each unit is moving. That's why Ripple engineers built the ledger to handle 1/500 transactions per second with 3-second finality, and that's on legacy infrastructure. Upgrades like AMM and sidechains push capacity well beyond that. You're looking at an asset capable of handling a nation's entire remittance volume without breaking a sweat. Now zoom out again. Visa's and MasterCard statements prove they're already on board. Both now list blockchain-based settlement as a core objective for 2025. Their test documents reference real-time liquidity bridging between digital and fiat currencies. That's Ripple's language. It's already baked into their future architecture, and you can connect the dots further. The Bank of England's CBDC Task Force, the Monetary Authority of Singapore, and the U.S. Treasury's 2025 Modernization Brief all mention neutral settlement assets. That's the official term for bridge currencies like XRP. Once these systems go live, price is no longer governed by retail trading patterns. It's driven by utility demand, and utility demand is insatiable. That's why institutional silence isn't indifference, it's preparation. You don't telegraph your buy order for the rail that the world's money will soon run on. You just accumulate. And that's exactly what's been happening for months. The on-chain data proves it. Large holders are absorbing supply. Exchanges are at historic lows. And corridor wallets are lighting up in patterns that match central bank testing windows. Every signal points to the same thing. The liquidity chain reaction is already in motion. When the switch flips fully on, retail won't have time to get ready. They'll wake up to a new price floor that makes $298 look prehistoric. And the holders who understood utility before the crowd, the ones stacking 100, 750, or 100,000 XRP right now, will own the toll booths on the world's financial superhighway. Because once value moves through it, it never goes back. That's the nature of a true reset. Here's the truth that no one in the mainstream is ready to face. The countdown isn't coming. It's already running. What we're witnessing right now is the quiet synchronization of global liquidity, the exact window where hidden systems transition from pilot phase to production. The rails are already humming under the surface. ISO 2022 migration is locked. BIS corridors have cleared their final tests, and Visa's architecture now mirrors Ripple's own patent language almost line for line. And the loudest signal of all, Ripple has gone silent. Because once activation begins, silence becomes policy. Every major monetary shift has looked exactly like this. SWIFT didn't announce its launch. Fedwire didn't tease a countdown. SEPA didn't trend on Twitter. They all went live in the dark. and by the time the public noticed, the system was already irreversible. XRP is at that same threshold now. We're standing in the repricing window, the narrow band of time between confirmation and comprehension. The insiders already know. The analysts already see it. The only ones left behind are those still waiting for permission to believe. Institutional wallets are accumulating, not flipping. Central banks are simulating corridors under NDA. Ripple's patents, audits, and quiet corporate adjustments all point in one direction: operational readiness. And when liquidity corridors across Europe, the US, and Asia switch from testnet to production. Because when an asset becomes function, its price must rise to maintain equilibrium. It's not about hype anymore, it's physics. Think of XRP as the lubricant inside a global engine. The faster that engine spins, the more pressure builds. At some point, the viscosity of that lubricant, the price, must increase to keep the system stable. That's the moment we're approaching right now. The world's 27 trillion in pre-funded Nostro accounts will not sit idle forever. Once even a small fraction is rerouted through XRP liquidity corridors, the compression ends instantly. Price no longer reflects speculation, it reflects throughput. The bridge becomes too valuable to remain undervalued. That's how you reach $75 XRP, not through hype or meme cycles, but through necessity. At that level, the math aligns with flow, a network that can handle trillions daily, sustainably, with minimal volatility. And when that day arrives, it won't look like a moonshot. It'll look like a software update. One day the screen will refresh, and the new baseline will simply exist. By the time headlines catch up, the repricing will already be complete. The holders who doubted will chase. The holders who understood will own the rails. That's the purpose of this message, to help you see the pattern before the noise arrives. Because when liquidity becomes visible, opportunity disappears. Every generation has a moment like this: the invention of the microchip, the birth of the internet, the rise of Bitcoin. But this time, it's not about a new asset class. It's about the infrastructure of money itself. You don't need to hold millions of XRP to change your life. Sometimes it only takes hundreds to stake your claim in history's next financial operating system. Because when the bridge becomes indispensable, every token becomes precious. And if you're watching this right now, that means you're early. Earlier than you think. If you're interested in what 800 XRP could look like in your life, make sure you check that video out from my archive. It will really blow your mind. As always, all information in this video is not financial advice. Please do your own research and consult with a professional. Like and subscribe to this video. It's greatly appreciated. Make sure you don't miss the next critical update, and I'll see you on the next one.